Here are 7 key facts about how the Federal Reserve affects the economy. Monetary policy. The Federal Reserve, often referred to as the Fed, is responsible for formulating and implementing monetary policy in the United States. It influences the economy by managing interest rates, controlling the money supply, and promoting price stability and maximum employment. Interest rates. One of the primary tools the Fed uses to affect the economy is the manipulation of interest rates. By adjusting the federal funds rate, the rate banks charge each other for overnight loans, the Fed influences borrowing costs, which in turn impacts consumer and business spending and investment. Open market operations. The Fed conducts open market operations, buying and selling U.S. government securities, bonds, to control the money supply. When it buys bonds, it injects money into the economy, promoting economic activity. Conversely, when it sells bonds, it reduces the money supply to control inflation. Quantitative easing, QE. During times of economic downturn, the Fed may implement QE, a policy where it purchases large amounts of securities to inject liquidity into the financial system. QE aims to lower long-term interest rates, encourage lending, and stimulate economic growth. Reserve requirements. The Fed sets reserve requirements, which are the minimum amount of funds banks must hold in reserve against customer deposits. Adjusting these requirements influences the amount of money banks can lend, affecting the overall money supply and economic activity. Lender of last resort. The Federal Reserve acts as a lender of last resort, providing liquidity to banks and financial institutions during times of financial stress. This role helps maintain stability in the banking system and prevents bank runs and systemic crises. Supervision and regulation. The Fed has regulatory authority over banks and financial institutions to ensure their safety and soundness. It oversees activities such as capital requirements, risk management, consumer protection, and compliance with banking laws and regulations. These facts provide a broad overview of the Federal Reserve's role in the economy. The intricacies of its operations and policies can be complex, so further research and analysis are recommended for a comprehensive understanding.